Traders Squeaky with a market update. Okay, so in the last 24 hours, the big news was Trump, and yes, Trump has moved markets again. So yesterday, the market was surprised with a headline that Trump was firing Fed board member Cook effectively immediately. So that was in Asian morning time yesterday when those headlines came. And look, this is very important for a couple of reasons. Firstly, with the Fed board, there are 7 voting members. Trump nominated 2 of those members in his first term. One board member recently retired, and so Trump has nominated a new board member there, so he's got 3. He gets rid of Fed Cook and replaces it with another one of his nominations. He will then have the Fed board stacked with 4 board members and have the majority on Fed voting, on rates decisions moving forward. So that is why the market is certainly looking at this very closely and reacting to it because yes, as we all know, Trump has been very, very vocal about wanting interest rates lower, and not just lower, but a lot lower. So by stacking the Fed board with his nominations, certainly that will potentially make the Fed more dovish and start getting those rate cuts. So that's the first thing, is that the market's looking at this as obviously a Fed that will get more dovish. The second thing is Fed credibility. The Fed is supposed to be independent. It's not supposed to be influenced by politicians or by politics. And this is the first time in Fed history that a sitting president has actually fired a board member. So we are in uncharted territory here, but certainly the market does not like it when central banks lose their independence. So yes, look, we did get a market reaction immediately from those headlines. The market that reacted the most was gold. So gold, early Asia yesterday, was actually selling off. It was trading down towards around 33.50. But as soon as that headline came out, it went up like a rocket ship, and it closed on its highs and quite strongly above 33.90. So it had a good $40 rally on the back of these headlines. Look, technically, certainly gold is getting back up towards some pretty stiff resistance. 3,400 and certainly above 3,400. The big resistance really is around that 3,440 area. But having said that, obviously the market is in a mood to buy gold again. So certainly, I wouldn't be running out to sell this rally at the moment. The other markets that did move on this is that look, US bond yields did finish the session overnight lower. US 2-year yields actually cracked below 3.7, around about 3.67. This is like multi-month lows. It's the lowest we've pretty much been for these US 2 yields, and so that's the short end of the yield curve, basically. Pricing in now. Yes, the Fed did pivot dovishly, obviously recently with Powell's speech, but with Trump stacking the Fed board, it's going to get even more dovish. So that's the short end, basically reacting to that. And 10 years also were lower and back below 4.3%, going back down towards 4.2%. So yields certainly did go lower on this news. And what does that mean? It means definitely you have a market that has got a high conviction that the next big trade is short USD. So those yields going lower certainly will help that cause. One currency pair, we've talked about this a lot, is certainly dollar yen. I'd imagine being still at very lofty levels, up around 147. It's been stuck in a range, 146.5 up to 148. But I'd say that 148 is certainly very stiff resistance, and that's the sort of levels to sell against. We'll have stops and shorts above, and at some stage, I'd imagine we will see those lower levels crack, and technically that's significant and could open, for a very good short. Again, watch bond yields. If they continue lower, this trade certainly should be on like Donkey Kong. Okay, moving along, today in Asia, yes, we do have some economic data coming out, and that's locally here in Australia. We've got monthly CPI data for July. The last monthly CPI data came in year on year at 1.9%, cracked 2%. That's the lowest it's been since 2021, which was very good news. That's why we also had an RBA that just cut recently this month. But this month it's looking like maybe we've based around that 1.9, 2%, because now we're jumping back up. Forecasts are for 2.3%. So that's a decent spike up from last month. And certainly there's no way the market is going to get excited about an RBA cutting rates again back to back in a September meeting when it meets on the 30th of September. So I would imagine Aussie at the moment is trading sub 66 cents in early Asia. So potentially bias is to be long Aussie into this number. I think that these are good levels. Aussie is a risk currency. You've got equities again overnight were in positive, back up towards obviously record highs. So it's hard to sell Aussie when risk is so positive. And also, we've just talked about how a market is certainly skewed towards a short US dollar trade. So it's got a couple of tailwinds that are supporting it below market. So yes, data comes out, 2.3. If it comes out somehow above expectations, I imagine we will see a good rally in the Aussie. So again, bias long Aussie, sub 65 cents at the moment before the number today. Good luck with your trades, and we will catch back in with you shortly.